the beauty of decision markets is that anyone can trade in the different conditional markets. It's not just people that own the token, but even a trader, a highly sophisticated hedge fund, or even a non very sophisticated person, a discretionary hedge fund that just has dollars and says, if this decision ends in a yes, so if this conditional markets lands in yes and is actually settled, I want an exposure in this token.
This is a transmission from the future, from a civilization that crossed the threshold into optimal life. The path to Utopia was messy, full of experiments, failures, and flashes of insight. These are fragments from that journey, conversations with the thinkers and builders who reimagined how we live, connect, and evolve. Welcome to Utopia in Beta. Paradise began as a prototype.
Hello and welcome to the Utopia in Beta podcast. And today I'm joined by Francesco from UMIA, and we are going to talk about using prediction markets for governance, which is a really interesting concept. Like, this was pitched to me and I was like, how? I'm just getting my head around prediction markets in general and how, like, I think like a lot of people, when they first started coming out, it looked like another kind of form of the meme coin gambling kind of vibe. So I'm really keen to hear more from you about its utility and why it's good to use this instead of other governance things. But to start with, maybe you give me an introduction to yourself and UMIA and how you got to where you are today.
Yeah, sure. Hi, Isabelle. Thank you for having me here on your podcast. It's really great to start explaining to people how actually this prediction market can become a useful thing for humanity and for coordinations between parties. UMIA is really our idea that around that and the way that we aim to solve a big problem in the crypto ecosystem. And the idea really came from the lab behind UMIA, which is Chainbound, the company where UMIA was incubated from. That is a laboratory that focuses on crypto, on Ethereum in particular, and on infrastructure solutions that enable blockchains and in particular Ethereum to do more, to become more useful, to become more entrenched in everyone's people's lives. That's mainly the focus of it.
Okay, cool. And so when I was pitched, I was told that it was using prediction markets to run organizations.
Yeah.
Take me through how that works. From step one, basically.
So the big thing, let's start with the premise of how we go from prediction markets to decision markets, and then I'll tell you how that fits into as a tool inside this big machine, which is UMIA. So prediction market have the ability practically to price future outcomes instantly. So the outcome could be a binary outcome, so yes or no, and you price the yes or the no. That could be anything from like, is X going to be the next president of the United States? You put a price to it. You sort of gauge through the common knowledge of people what's the probability of that and put a price behind it because people put money. So that's a great coordination mechanism at a high level. And what we did with that, we said, okay, but you can price whatever prediction market wants, but most important, you can price decisions and you can price the impact of a single decision. And that's very, very unique. And a case is you are a company and you have governance and you want to make a decision out of it. You can make a token voting out of that, which is literally whoever has a lot of votes says yes or no, and they easily manipulate the direction of that of the token in the strategy that they like. Or you can use something which is very similar to prediction market, which is the decision markets, in which you say, okay, we want to make a decision, and people can price the outcome of these decisions, and people can trade and speculate on these outcomes. And an example is you have a token trading at 10, and you have a decision market that says should the token do X or Y? And X could be issue extra 100 token to Paradigm because they are a great VC, or they should not, right? That's a simple yes or no. And then people trade on this. And anyone from a sophisticated to a non-sophisticated investor could say, well, fundamentally, the token price with this should be 110. So the yes plus token should be 110. The no should be 80 because it means that someone else would take that money and they would use market share and so on and so on. So you have a very, very simple way for people to price the future outcome of decisions and allow on one side everyone to be incentivized and interested to express their preferences for a given governance proposal, hence make money. And on the other side, you have the team that has a very clear and less corruptible way to decide the future of a proposal. So that's a very, very high level how it works. And how does it fit into the UMIA protocol? Is that UMIA is this system that allows projects to launch a token. So we're going to have our own sort of launchpad, and then have that token fully governed by decision markets. And when I say governance, it means you need enforceability, because otherwise, the example I made before, then the founder could just say, well, you know what? You said the market said I had to issue 100 tokens more because the yes rated higher than the no, but I'm not going to do it because, well, I think it's better not to do it. You need enforceability. So on-chain enforceability is easy because it's just programmability. So you have an easy way to say, if the yes is higher than the no, automatically this function on-chain will be called. And so that happens. And off-chain, we need an off-chain enforceability. And that happens with the legal framework that we're building in partnership with MetalX, which is one of the best legal law firm on this setup of things. So yeah, that was high level why and how.
No, that's really, really interesting. Okay, I've got so many questions around that. First of all is kind of the relation to price, and how do you avoid those with the most money shaping the decision because they have the most money to play with? And
that is, first of all, a very unique part of decision market, which is if you are a large token holder, you have a disproportionate amount of control over that single token and that single project. You can take the Aave proposals. Well, the main team has majority of the shares of the token, and they will direct it wherever they want. But here, the beauty of decision markets is that anyone can trade in the different conditional markets. It's not just people that own the token, but even a trader, a highly sophisticated hedge fund, or even a non-very sophisticated person, a discretionary hedge fund that just has dollars and says, if this decision ends in a yes, so if this conditional markets lands in yes and is actually settled, I want an exposure in this token. So you have people buying tokens conditional on future decisions, hence making token price decision a new asset class. And the beauty is now you have not just token holders, so a very small share of people managing it, but you have the broader market, the broader rationality of the market pricing this and giving a fundamental price to the two things. So again, see the example I'm making again and again. Fundamentally, it trades at 110. If the thing starts to trade at 130, people that have fundamentals would just say, well, this is oversold. This is overbought. I'm going to sell it and bring it back to 110. So if there is a rationality, then you have that extra in the mix to drive the actual value. So the economic aspect is very, very powerful here into bringing rationality and non-corruption from large token holders into what they want to. Still, there is a risk.
Okay, so does the economic thing, do you believe that it brings kind of incentive to kind of act in the best interest?
100%. 100%, because first of all, there is a direct incentive to act in the best scenario. In the best scenario for the project, because if you are a token holder, you would trade in the market that is a conditional market that then settles, and if it settles at a higher price than the one you bought, well, you made a sort of arbitrage, a profit over your position that was conditioned and it settles. And on the other side, it doesn't really make a lot of sense to trade a market in which you, for example, buy a conditional market that says you should do X and that X is actually bad for the token, because you are spiking up the price of the token, knowing that as soon as it settles, it's going to drop to zero or to nothing. So you are making exposure in a token that on top is going in a direction that is, let's say, stupid. And so you're doubling your chances of losing money. So again, the rationality, the economic incentive, and the simplicity of the setup could drive a lot of good decisions.
Okay. And do you see this kind of governance structure being applicable to anything beyond kind of token governance, for example, like more in real world organizations?
100%. The beauty of all of this is is the division between what's the tool and what's the product. The tool of UMIA are the tokens, the launchpad, the decision markets. Those are tools to get to a product, and the product is a new framework of capital formation and coordination. Capital formation through the token setup that we have, and coordination with decision markets. That's the product. Does it apply to Web 2? Does it apply to other things? 100%. And there is a very interesting chain of thought analysis and research arm inside of UMIA that we're exploring, which is in an AI first world in which we are going to have a lot of solo founders, of small teams, very small teams, having ideas and real application of LLMs for example, a specific agentic use cases or specific hardware with a certain things and so on. Well, the speed at which venture capital goes, at the speed at which normal capital allocation goes, doesn't really fit that, because they could literally just want, a way to raise money, have people have shared ownership of it, of whatever whatever they are building, and on top of that, have a sort of recurring expense setup, which is the OPEX on LLM tokens. And so with that sort of setup, it fits really, really well this capital formation framework that UMIA is. So to answer your question, 100%, the tokens, the Web3 setup, and the way that we did it is a tool, is not the end goal. The end goal here is capital formation, and capital formation can happen for Web3 companies, on-chain companies, AI, agentic specific companies, Web2, public goods, collectibles, and anything that benefits greatly from shared ownership and decision markets.
Okay. Would you be able to take me through kind of the scenario in a Web2 company, or kind of like a public goods situation where this could be implemented, and how it would work, just for some tangibility, basically?
Yeah, let's make an example of entrepreneur from, let's take Italy. I'm Italian. From Italy, he has a great idea in which he wants to build an AI agent for people to to have a different tool for babies to play with, and this is like a game that helps babies learn how to speak. Let's do this, okay? So they don't have connection to VCs, but the idea makes sense, and the system has an initial sort of cost to set it up, and then a very recurring cost of OPEX, which is the expense to LLM tokens and the subscriptions and so on that goes to the big to OpenAI and Anthropic, whatever. And so he says, well, I really need, first of all, the first 100 users, but on top of that, I need a way to sort of raise money, and I need to do it fast because I know how to do this. Doesn't take a team of 10 and so many people. I need good distribution, marketing, and I know how to do it. So I just need money to cover the first two. Okay. So they set up, we call them a quantum token, which he raises, let's say, $500,000. And with that, he says, a part of it is going to be used initially for the distribution. So I will like direct access to a part of it, and I can set up in the framework that we have. And then I need a monthly disbursement of $50K a month to cover the cost, the OPEX cost of LLM requests, right? So with that, he set it up. He has the token. He does this token fundraise, and people that believe in this sort of things buy the token, and they have direct exposure in the future potential success of this company. He sets up the legal structure through the UMIA SPC, which is the legal umbrella that we built, in which fully delegates ownership to decision markets. And then he has this monthly disbursement that goes directly to the OpenAI and then invoicing mechanism that happens with a technique that's called zkTLS, but we don't go into details. But anyway, there is as a way to be sure that those money get used to what he said to be used for. And then, he just built the company. The legal framework makes sure that token holders actually accrue value, and it's not just, oh, I have a token that somehow is connected to this toy company. No, the token holders request sort of information and so on, and everything gets sort of accrued to the token value. It could be through buybacks, it could be through a vault mechanism and whatever. But with that, he would say, well, I raised money in 5 days or 7 days because my idea really made sense. I have my first 100 users, which are also the token holders. So they have upside, and they had upside, so they bought me instead of, I don't know, the Lego or whatever else there was in the market, because they were like, I own something, and I also now have a game for my kids. And on top of that, he has an easy way to pay the initial bills. And then if things go great and this becomes $1 million business, he can migrate to another setup and anything that would make more sense for him. So that's the case in which I would say we really solved the problem. Was crypto the focus? No, the crypto was the tool, and that's what I really, really stress about.
Okay, so it's kind of like crowdfunding with decision markets.
Yeah.
Okay, interesting. With the decisions and with the decisions that go into the decision markets, who chooses what is to be decided on? I only ask because in kind of other distributed mechanisms of governance, like DAOs, too much decision making can get really complicated and slow down decisions. How do you avoid that and move away from those kind of issues?
100%. I agree that the centralized decision making on the day-to-day is a mess and is also not incentive or compatible. Decision markets are there to replace board level decisions, nothing else. The CEO and the management and the operators, they run the business as they would run any business. The only difference here is the treasury of the business is in the hands of decision markets, is not in the hands of the actual founders. So you have this sort of difference in trust and accountability, which is good for, the example I made before of the Italian founder. No one really knows who he is, but you have less trust to put into him because he doesn't really have access to all the money. He has access to this disbursement that goes to him. So that's the big, the first thing. And sorry, the second part of the question was?
The decision, I mean, that was answering most of it. It was, how do you make a decision on what?
So the second thing is we need to give customability for the set of businesses that come on board on how the decisions get created, the proposals get created, and how they get decided. So there are sort of companies in which it would be okay to have a fully permissionless way to set up decision markets. And anyone can set it up, and that probably a more Web3 native company that will be okay with that type of things, that are okay to sort of decentralize the decision-making process, and they to a maximum level, and they see real upside into that. then anyone can really trade. And I would say it's very impossible. It's impossible to put any constraint on who can trade, because it's the big preface of decision markets. Then there are more traditional companies in which we would either have a minimum stake of the native token to get in, or even just allow the management to get in. And this to get in, to actually open the decision market. And the decision market could, we didn't say this, but I think it's important. The decision markets direct a few very specific decisions, which is management of treasury, so increasing the disbursement, do investment from treasury, and then changing token supply, minting or burning, changing management, and changing strategy. So anything really which is at the board level, a board would sit around any of these decisions. Anything else is the team that has to do it. So that's the first thing. Second thing is, that's all.
Okay. And I'm keen to hear more about the enforceability as well, especially offline, because I feel like online that can be enforced through code and smart contracts and all those kind of things. Offline, you said that you're working on a kind of legal structure. How does that work, and how can you make sure that it does work in the best interest of the company? I'll go into a separate question beyond that, but how does the legal structure possibility work?
Yeah, and that's the beauty of, that's why I think one of the beauty of UMIA, that we are innovating also there in the legal aspect, because UMIA has this UMIA governance SPC, which is an overarching entity, which you could see as like the big buckets that then holds all the project that launch on UMIA. And this big sort of buckets has a few rules for the project launch. One is that they are required to delegate governance, so board governance, to decision markets. Then any project that launches on UMIA, they launch on top of the SPC. They are sub-companies, they're called. They have a segregated balance sheet and a full legal accountability. It means they are at all effects a company, and they have zero accountability or liabilities related to the rest of the companies. But the only constraint they have is what I said, the decision markets. That's really the fact that allows us to ensure that projects that launch on UMIA, whenever a decision market doesn't have enforceability on chain but is off chain, well, we know that that's going to be enacted. Otherwise, there is a very easy proceeding for token holders to say, this was decided on chain, this was not done by the team, we require it to be followed as if it was a board decision. So that's like how it works. And the cool thing is the innovation, where I said the innovation comes, is that this is actually a setup that is used by mutual funds. The SPCs normally are used for mutual funds. Because you have the big fund, the big company, and then you have the single funds that are single sub companies. And instead here, we use it for something else. We use it for projects that have different. So yeah, it's going to be very interesting to see how teams play around with it, and how they utilize, and how the community to project relationship builds in terms of any off-chain decisions that could be contentious in any way.
Yeah, because I mean, so Utopia and Beta looks at kind of the governance experiments that are happening on chain and online, and then looks at how they can be kind of in the real world and like in the creation of new societies. And I'm thinking, like, in the creation of new societies, which are founder-led, I know at least a few founders that they would offset decisions, but maybe wouldn't. They have a particular way that they want to take, which is more of a long game that maybe the community can't see. And I just wonder how that works around, okay, you put the decision to the community, to the decision markets, but you don't actually like the way that the decision's gone. Or you've just got a whole group of trolls, which I realize that you've said that there is kind of incentives to not troll and to work in the best interest of the project. But if for some reason you've got some really kind of well-funded trolls that really want to kind of just mess with stuff. Is there a kind of, I guess, kill switch or mechanism for not following the decision market?
Yeah, so there is. Let's start with three levels of safeguarding. The first level is ethical and legal, in a sense. If a decision is heading into something that's actually illegal, there is clear safeguards on UMIA to not go there. And it could be fund something that should not be funded or give money where it should not be given. That's first level, and that's like no discussions on that. Then there is a second level, which is something which is, as you said, irrational for the team to go forward with, and so on. And that's the market. And we really truly believe that the market sort of always drives the maximizing welfare function to the token holders.
So ethical, the market, and those are the two main things. And then there's another thing, but Okay, cool. Well, we're coming to the end of our time. I realized that I've only scheduled for half an hour. But before you go, I just want to hear a bit more about kind of, you said that you're doing research and continuing development. Where are you positioning yourself going forward in the next couple of years, and how do you think the rise of prediction markets might influence that?
Yeah, so where we want to position ourselves is be the best sort of capital formation mechanism on chain that exists. Have a solution for teams and projects that come from different backgrounds, that have different type of ideas and requirements to come on board and launch the project. We believe that projects that are community first, so projects that really require the first 100 users and live and breath because of that, would rather decide into this. And also we aim to prove that decision markets are a great governance mechanism for this specific type of niche. We think that is the first angle, and that's like the biggest probably thing that there is around what we aim with UMIA. What are the results is that we build a solution that allows tokens to be a welfare maximizing sort of a financial solution. So our vision is we move from a world in which people say, well, tokens really are most of the time memes, to a world where we say, well, tokens actually are a great programmatic solution to transfer value and to accrue value in a given project idea and so on. So that's like high level division. And where we see with prediction markets to go is prediction markets, again, are a great, in my opinion, pricing logic into very exotic stuff that could be from the probability of something to so on. And it's natural progression at this high level and sometimes vision sort of logic, because prediction markets started from just betting on, who's the next president and so on, to now be more sophisticated. But that's really where it comes. We see that then spanning across different type of industries, and obviously governance is the one where we believe that to be a case. So the connections there remain, that we simply believe that cultural bias and cultural interest is going to move towards having prediction market as a governance framework and decision markets.
Okay. I feel like I could go into so many different topics around this, particularly, as you mentioned, its increased importance around AI development and kind of solo entrepreneurs. So we're going to have to do another call at some point. But thank you so much for coming and sharing kind of what you've been working on and how it could impact governance going forward. It's been super interesting.
Thank you. This was great.
Okay, thank you.